All right, welcome everybody to to episode one of the Students of Real Estate podcast. Today we're joined by Christopher Proule, a real estate developer and investor in Greater Boston, and the vice president at Volnate Capital. Chris, thank you so much for being here.
Thanks for having me, guys. I'm excited to be on.
Definitely. So, I'm Lorenzo. I'm a junior here at Bentley and the vice president at Bentley's Real Estate Group. I'll give Adam to introduce himself.
Yeah, my name is Adam Fuller. I'm currently a senior here at Bentley. I was president last semester and stepped down to VP this semester.
Awesome.
Thanks.
So, Chris, if you could tell us a little bit about your background and where you grew up.
Yeah, absolutely. So Kris Proule, originally grew up in Bridgewater, Mass, which is about 30 minutes south of Boston. Great town. With a lot of close friends there, and I've been, as of recently, trying to do some projects there as well. Once I graduated high school, I went to Bryant University down in Rhode Island. It's a business school. I focused on finance there, and then eventually moved up to Boston once I graduated. And I've basically been in Boston or the Boston area for the last, 14, 15 years. And just recently moved out of the city, but very close suburb right outside the city.
Awesome. And so you said you studied finance. How did you know you wanted to do finance, or how did you end up doing finance basically?
Yeah, I think for me, math always came easy. Growing up, middle school, high school, math was always my best subject, and kind of just gravitated towards types of roles like that. And then once I got into Bryant, I remember I was torn between doing marketing and finance, and my school guidance counselor at the time at Bryant said you can get a marketing job with a finance degree, but you can't get a finance job with a marketing degree. And from once she said that, I was like, all right, that's a good point. So I just went into finance, and took a bunch of different finance classes, obviously, because that was my major, and kind of narrowed down what type of finance route I want to go.
Nice. And so I'm just wondering, how were you as a student? How would you describe yourself as a student? Were you super career oriented, or were you more, having fun, figuring things out as you go?
No, I'd definitely say more career oriented. I've always had jobs ever since I can remember first job was in sixth grade. Just, mowing lawns for people. And it got to, until I got to the age where it was like the minimum age you can get a job, then I got a job. And I've always had jobs my whole life. So when I was at school, I would say most of it was working hard and studying to get good grades. I was a pretty good student, but I wouldn't say it just came natural. I really had to like work hard at it and study extra and do everything to get the best possible grade. So I'd say overall, I was a pretty good student.
I
Cool.
think it's pretty interesting too, the point that you mentioned about, that choosing your major in finance versus marketing. As
Yeah.
a marketing student myself, and I do love marketing. I do have my own ecom business, and I think that like marketing that way has, I've learned a immense amount of lessons from that rather than school. But in my senior year now, I'm taking a lot more finance classes because I'm realizing, hey, what I'm learning through these marketing classes isn't really comparable to what I'm doing in the real world. And when it comes to career choices, there's a lot more that a finance degree and that finance material that you're learning in college can be applied, to your future career path. So just wanted to make a note of that for any of the students listening that, just, yeah, your point on kind of choosing a major that aligns with, what your future career aspirations would be.
Definitely. And I loved marketing. And I think that's why I gravitated towards it. And I think that's why as I've gotten older, I've gone the more entrepreneurial route because you can mix, the marketing, the communications, you can mix finance. So what I ended up doing was doing double minors. So finance was my major, and my two minors were communications and marketing, just because I had an interest in those. And I think when you combine all three of those, that's really like the entrepreneurial route.
Right. Totally agree.
Awesome. And so you spent 4 years at Bryant,
Yep.
and then you ended up at the Hanover Insurance Group. You spent a couple of years there. And so can you tell us about that experience? How did you end up in that
Yeah.
world? And yeah.
Yeah. So I actually interned for them my summer of junior into senior year. So we were what's considered one of their champion schools. And I kind of learned this once I got there because I got part of the recruiting team, and I would go back to Bryant and interview people for internships or full-time roles. They had champion school. So Bryant was one of them. I think Boston College was another. Assumption was another. And there's a few others. Holy Cross, I believe, was one. And what they would do is they would come to our career fair and they would hire a lot of people out of those champion schools. So I think I met them originally at the career fair, put in to get into their finance internship role. And I believe 5 or 6 other Bryant students also got internships there, whether it was in the marketing department, communications department, accounting. But they had a great program. And what I liked about them was they tried to, it was basically used as a tryout. And they told you that in the beginning that if you do a good job, there could potentially be a full-time job offer at the end of this. Like this isn't just to fill a gap and be, inexpensive labor for our company. This is essentially a tryout for you. So I took it very serious. I did pretty well with it, and I was, fortunate enough at the end of the internship, they offered me a full-time role with a, very competitive salary and benefits. And it was just a nice relief going into your senior year, knowing you had a full-time job already lined up. And what was even great is I had such a good relationship with my manager there that they offered me to continue my internship throughout the school year. So what they did was they actually connected with Bryant, which is obviously their champion, one of their champion schools. So they have a good connection with them, was able to get me class credits and continue to pay me. So I was able to work there probably 15 to 20 hours a week while also going to school full time. And it was great to get a little extra money, but also just continue to get exposure into the exact department that I was going to be going into once I got there. So I really felt like that gave me a leg up. So then when day one hit of my full-time job, I had really already been working there for 15, 16 months. I knew a lot of people. I knew where to go. I knew who the players were. So I felt like that really just gave me a leg up to start there. And then I also really admired about the company is they did a rotational program. So what that kind of did was you worked in different areas within the finance department for 6 to 9 months under one manager, and you would have a director there, you would have a manager, you would have other team members, and then after 6 to 9 months, you'd get rotated to a new role within the finance department. So give you exposure to different management styles, which advice to students right now is you're going to have different managers. Some you're going to love, some you're going to hate, but you have to kind of learn how to work with different personality types. You're never going to be able to align just with, somebody that's exactly like you. So I felt like it was really cool to get exposed to different areas, see different areas of the business, see different personalities of managers and directors, see how they want to see different reporting. So I give a lot of credit to the program they had there. It was a very well-structured internship and a very well-structured entry-level job. And that's good advice to students right now is find a company and that has a good mentorship program and a good training program, and that will take you very far. It's something completely different from my career. Like my wife is in sales, and the first job she had was an unbelievable training process. Like she got unbelievable cold calling training, e-pitches in front of people, and they just had such a good training program that when she eventually went to a different company, she just had such a leg up than the other salespeople.
Wow, that's a great story. And so I'm wondering, you mentioned that you had a rotational program. What was kind of your favorite part? Like when they put you in the finance part or the marketing part, what was your kind of favorite part that you like enjoyed the
Yeah.
most?
So it was all in the finance department. It was just different groups within the finance department. I would say looking back now, I appreciated most just getting different management styles. I think in the moment, it was a little frustrating because when you're new in your career, you'll learn that it takes, close to 6 months to like feel like you're making an impact and not
Right.
just constantly learning. So
Yeah.
it was kind of frustrating in the moment, being like, okay, I just got used to doing this and I've gotten pretty good at it. Now you're taking me and putting me somewhere else and I have to start all over. So that was in the moment was frustrating, but looking back older in my career, it was the best thing that could have been possible for me. Because what you'll learn is things constantly evolve at whatever company you're at, whatever job you're at, and you have to be able to adapt. If you just get siloed into one role, you're not adaptable. You can't pivot to other different areas. When you want to take that jump in your career ladder, you have to be able to adjust and pivot, go in different directions to be able to grow. But if you're just used to doing one type of role in one specific type of way, you're not going to be able to adjust. So that's what I'd say was probably the best piece.
Yeah, and that's funny that you mentioned that because this summer I actually also had an internship in a development company in Miami, and it was at the beginning I was kind of nervous because I mean I didn't feel like I was contributing that much, and I was like, oh, like I don't know if I like this. And also I noticed that the management part that you mentioned, that's super important. Like I didn't think that getting along with the other people in the team would be so important, but that was the biggest thing
Yeah.
that made the internship so enjoyable. Contributing with them and participating, and that was definitely the biggest part, and what I enjoyed the most. And I also was grateful because I had the opportunity to not only do the finance and underwriting stuff, but I also had the opportunity to go on site and look at projects
Yeah.
and talk with the project managers and the marketing team and all that kind of stuff. So that was a great
Yeah.
experience as well. Um,
Definitely.
and so you spent 3 years there at the Hanover Insurance Group, and then you switched over as a consultant at Deloitte. Can you tell us
Yeah.
about that progression?
Sure. So yeah, like I said, I did the internship for about 15 or 16 months and then full time for about just shy of 4 years, about 3 years and 8 or 9 months. And then I was ready to make a change. The company Hanover was fantastic to work at, but it was just I wanted to try something different. And I think it's important for anybody that's listening to see what the story on your resume tells. If you are working at a company for 6 months and then you jump somewhere else, you work there for a year and then jump to somewhere else because you get a little bit of a pay bump, you're going to hit a point in your resume where employers start to look at your resume and just see you're just hopping from one job to the next. And it's going to be a big red flag. So for me, I knew around like 2.5 years of being there that I wanted to make a change, but I wanted to do it strategically. I want to not just go to another insurance company for, a 10% raise. I wanted to try something completely different. And actually a recruiter had reached out to me from Deloitte. I had a couple friends that worked there, so I had spoke to them about their experiences, and I knew it had a very good reputation. So I knew putting that on my resume would be huge. So I really pursued it 100%. Got a job offer extended, and the original role I was in there was essentially as an internal consulting role. So what you would do is model out projects with partners. So if they secured a job, we would help build out the financial model with them. That would be staffing different roles. Each role had a certain cost to them, and it was trying to figure out like how can you structure this deal to be profitable, and then managing it throughout. So those skills, I'll fast forward and then go back. Those skills were super important when I got into development because when you're underwriting and modeling out a real estate development deal, you have to forecast out the entire project. You have to forecast out the labor you're going to be using, the materials you're going to be using, what is the ARV going to be at the end, and figure out how to make it most profitable. And then you have to manage that throughout. It can't just be, okay, we built it. This is what it's going to do. So going back to that, I did that role for about a year, maybe a year and a half. And one of the partners, I was traveling a little bit here and there, maybe like once a month, once a quarter, for a couple of days. And I was at an on-site meeting, and one of the partners asked if I had any interest in coming over to the client-facing, they call it strategy and operations group, that they were doing. And that was a pretty big promotion to go over to that, but it's a very hard thing to do. A lot of the people that they directly recruit from come from either Ivy League or have a lot of experience in Bryant, great college, but not an Ivy League school. So for me, I didn't really have that advantage, and I just had to kind of prove myself in the other role first. And then I still had to go through the interview process, as if I was coming from an outside team. I was lucky and fortunate enough to have partners that I had worked with vouch for me and say, we've seen him for the last year and a half. He does great work. We want him over here. went through the whole interview process. I flew down to Texas for the final round interview, and I got the job, accepted it. And then for that role that was for about a year. It was the true travel and consulting. So 4 or 5 days a week on site wherever the client was. So you would fly out first thing Monday morning at 5 a.m. and then not get home until 11 p.m. on like a Thursday. It was a lot of hours. There's a lot of pros and cons, I would say. So the pros, it was like drinking from a fire hose. It was, you're constantly learning, you're constantly coming up with issues. I learned more in that 1 year than I probably did in 4 years at any other job. It was unbelievable. The training again was fantastic, and you were just on site every day. So it was from 6, 7 a.m. you were at the client site until 8 p.m. You would go home, eat dinner, and then a lot of times you'd have to log back on and do work or meet your team in the lobby and do work together until midnight, whatever it was. I would say the cons were there was a lot of hours, which isn't a huge deal when you're young. But it was more of the constant pressure. So you would have, you might get a text at 11:30 at night saying, I need this PowerPoint for 7 a.m. tomorrow morning. So you'd stay up until 2, 3 in the morning, putting together a PowerPoint. You come in and they might say, oh, thank you. You know what? Actually, we don't need this anymore. And you'd just be kind of, a little defeated when that would happen. But then also you don't get to spend as much time with your family and friends. So at the time, I didn't have kids. My now wife and I had just gotten engaged, and I really took a deep look at what is the career path at Deloitte and saying, even when you get to the top, you're still traveling, you're still, on site. You get a little bit more flexibility and you're not doing as many hours, I would say, but it's still stressful. You're still away from your family and friends. And I knew eventually I wanted to get to where I'm at now, the real estate development side. But I didn't want to jump there too quick. I felt like, I should stay at Deloitte a little bit longer. And I had gotten connected to Ricky through a mutual friend while I was still working at Deloitte, saw what he was doing. And I remember coming home to my wife and just saying, this is what I want to do. I still was telling myself, X age or X salary amount, then I'll make the jump. And we had a conversation. She was just like, why don't you make the jump now? And for me, looking at my career at Deloitte, I was going to probably get promoted the next year. And then I would have had to wait probably 2 or 3 years for the next promotion. But at that point, you probably would have had to go get your MBA. And if I wasn't going to do that long term, it'd be kind of pointless to go get your MBA to advance 2 more years and then quit. So I just made it to the decision that I want to go that route. And this is advice to students, if you ever want to kind of start your own thing or take a leap of faith, do it with a plan. Don't just jump and hope for the best, because it probably won't work out. So what I ended up doing was I had made that decision probably in May of 2019 that this is what I want to do. I want to do it, in the foreseeable future and the near future. So what can I do to make sure I have something set up? So I continued to connect with other developers and continue to stay in touch with Ricky. We had developed a business plan together. It was a mix of my consulting background mixed with his development background. And we, developed this whole business venture. And that kind of accumulated from May of 2019 until I made the jump in November of 2019. I had left Deloitte and jumped into real estate development full time.
So you mentioned that jump and that transition. And I just wanted to touch on, I know you mentioned the importance of, early on that mentorship and the training and kind of getting, your feet wet in a bunch of different areas, especially that rotational program. But likewise to a lot of students at Bentley going into the financial services industry right out of school, and kids that are interested in real estate, without any real estate majors or whatnot. A lot of that interest in real estate is kind of, I guess you could say, funneled into just going financials. But to, jump off of what you were saying with that transition, what do you think the financial services and consulting industries, provided you to move forward and make that jump? Anything specific about the
Yeah.
financial services and consulting industry outside of, just the technical skill sets?
Yeah, absolutely. I'd say for the finance or accounting backgrounds, you do see a handful of developers that have gone that route, whether they worked at, Fidelity, investment banking or consulting, whatever it was. You see a lot of those transferable skills because you see how you model out in Excel translates to underwriting for a development deal. And then for the consulting side, I would say that was more interacting with clients or interacting with sellers. So a lot of these developments deals, you're trying to do it off market or you're trying to negotiate with a seller. And that kind of consulting background comes into play where you have to reason with them, but also provide the backup and the info. So when you're working with a seller to try and secure a property, you're not just saying, this is my number or I'm walking away. It's using that financial background in your back pocket to be able to say, okay, well, market rate, this is probably what your property's worth. I need to put in X amount into it. Here's what my carry costs are going to be. Here's what my sale price is going to be. So I need to be able to be at this profit for the deal to work. So in order for that to work, this is what I need to purchase it at.
So you were in Deloitte, you were consulting real estate developments.
No. So when I was at Deloitte, it was actually a few different clients. I can't actually tell you the client names, but
Right.
it was a various industries. So no, it wasn't real estate development.
Okay.
There was a bunch of different industries that I had worked with. And what they kind of do at consulting firms is until you reach a certain level, they expose you to different companies. I would say because I had an insurance background before, I gravitated towards the insurance clients just because similar to what we talked about before, when you're the first 6 months in a role, it's hard to prove your worth. So it's easier for me if I got an insurance client to be able to use that background and apply it to the consulting.
Right. And so until now, you haven't been introduced to the real estate world.
So it's funny, I had a very small scale background into it. So growing up, my parents, we had a single family that they had added an in-law and we lived close to a college. So what my parents did was they rented by the room, by the bedroom on our second floor to college kids. And then the in-law apartment on the third floor, we rented also to, graduate students or professors. So I saw kind of that mindset of like, okay, you can rent rooms out and make a profit off it. And then what they would also do is buy foreclosed condos in my town. And I'm talking like at the time, like $20,000 condos that were foreclosed. They would buy them. My father would go in and my brother and I would go help them. We would renovate it, fix it up a little bit, and then they would rent it. And just the concept of, mortgage tax interest costs this, the rent is this. So that leaves, X amount of profit per month, but also the mortgage is being paid down. So then
Right.
20, 30 years from now, when they go to sell the property, there's X amount of profit. So that concept made sense to me. And I actually found recently from 2014, when I had first graduated college, I think I was 6 or 7 months out, I had modeled out this whole like proposal to my family to like help me buy a rental property. Here's the profit they're going to get. They ended up saying no, but it just the mindset of that was in me early on. So I always knew that I wanted to do that.
Well, that's interesting. Okay, so since the beginning, you knew that you wanted to get into the real estate world, and,
Yeah.
and then you got introduced to Ricky. Can you tell us more about that? How did that come up, and what kind
Yeah.
of clicked in you that, oh, I want to do what he's doing, or I want to partner with him?
Yeah. So I had a mutual friend that I had grown up with that had similar to me, switched careers. He wasn't in finance, but he was in, a different career that he was doing very well in, but he wanted to do real estate development. So he was probably a year to 2 years ahead of me of making that jump. So I had reached out to him, went to a couple of his projects he had going on at the time, sparked my interest. And when I was there, he was like, "Oh, I should actually introduce you to this other developer. He has a background like you. He was in finance in the corporate world. Then he jumped into this. He's, growing pretty well right now. it wasn't really an introduction for a job. It was more just an introduction just to get exposed. And I went to one of his projects. At the time, it was, I think, a 9 unit project. Yeah, it was a 9 unit project, and it was gutted to the studs. And I remember just like walking through, and I'm like, this is pretty cool. Like, this is a lot cooler than sitting in like middle of nowhere, Illinois right now at project. And, you know, this is exactly what I do want to be doing. And I left very excited. There was no conversation about like, hey, we should team up. I have a business plan. But this is also advice to students. If you want to try to find either a mentor or try to get a job, make sure you're adding value and not just, sucking their time away. So before I wanted to try and reach out to Ricky again to get together a second time, I wanted to bring something to the table. I didn't want to just say like, hey, can I come bother you again for an hour and have coffee? Can I bring something of value to you? So I reached out and I just said, hey, this is what I do at Deloitte. This is how I feel like those skills could help your business right now. And I also have this business plan. And so he was a little intrigued. We met up again, went over my ideas, and he was like, yeah, this is cool, but I have no interest right now in partnering with anybody or hiring anybody. So I left there not defeated, just more of like, all right, well, I just have to really convince him now. So I set up a third meeting and I was very direct and just said, you are not doing this efficiently. This is how I can help. This is exactly how it will help your company to make more money. But then also, here's how I can help other developers like you doing this exact same thing. And that kind of clicked in his head of like, okay, this could help not only my business, but it could be a different business venture. So at that point, we started to kind of do like a trial. So while I was still working at Deloitte, nights and weekends, I would be doing stuff on the side for Ricky, all from my computer. So even when I was traveling for work, it was easy for me at night to be able to do the work for him or on the weekends do the work for him. Show that it could work and not only free up more time for him, but help him grow. And I think that's where it really clicked. And over that, May to November, when we decided to make the jump, we just figured out that it could be a very viable business and work well for both of us.
Awesome. And so I'm wondering, like what kind of why were you so motivated to jump into the real estate world? You were, you had a good job at Deloitte,
Yeah.
but you were super persistent. You set up 3 meetings and what was
Yeah.
super straight up. I wanna, here's how I want to help you. So why were you so motivated to jump into that world?
Yeah. I mean, I would say one of the bigger pushing things was how much I was traveling. It was starting to wear on me. And the hours were starting to wear on me and just more of like sitting back and figuring out like, all right, what do I want to actually do with either my life or my career? And once I made up my mind of like, this is what I want to be doing, like I just it clicked that like, okay, this is what you want to be doing. Don't waste any more time. And I started to think kind of more of the future of like, okay, we're engaged now, probably going to start having children at some point in the near future. It's going to be a lot harder to make that jump from a stable salary, a stable, health benefits, insurance, everything when you have a child. Now is the time, make the move and make that jump. An important date to tell you guys was November of 2019 is when I made that jump because then February, March of 2020, COVID hit.
Right. That's wow.
Yeah, it's a tough time to start a business during COVID.
I love that. I love that. And so, and I love that you mentioned that because, um, we are, me and Adam are very young right now. We're 20, 21, 22. And, you know, personally, I think, right now we don't have any responsibilities, big responsibilities. So it's like, if you want to do something, like do it now, like like you said, you don't want to be already have a full career and or set up and comfortable and have your wife, have some kids, and then do that and then jump into the world. Because again, real estate is in my eyes is risk and return, right? Or the returns are based on your risk. And so so there's a lot of things that you can't determine, like the market, how the market goes, how
Right.
about the COVID happening, you never know that's going to happen. And so, you know, I agree that the best time to jump in is Just make a plan and go for it. And so I'm wondering, did you so November 2019, you jumped right in, you started working for Ricky. What were you doing specifically? What were you helping him with more?
Yeah. So a lot of what I was doing for him at the time was more taking like the back end finances off of his plate because it's very time consuming. So
Right.
I jumped right into creating more like templates for him. So it's very systematic when you can start like to do the development. It's a lot of like the same processes, and there was no templates that we really had. I built out a financial model to help underwrite deals quickly. So what you'll see is when you start to grow in the real estate world, you'll get a ton of deals sent your way every week, and most of them are not good, and you don't want to spend 5, 6 hours underwriting a deal for it to be a dud and waste your time. So I created a lot, I used my finance and Excel background to create these financial models that I could quickly enter in a couple of key, things like purchase price, renovation cost, rent roll, tax. It would take me 15 minutes to fill it out, and it would automatically model out what the returns would be. And then I also would have like an automated thing at the top that would say, in order to hit X return, we need to purchase at this price. So it just automatically do it. It was very easy to quickly enter it in and say, hey, purchase price needs to be this. And it was just quick to send it out. I did a lot of the project management throughout. So not only just the accounting side of project management, but also going on site, learning from the GC, who's become a very good friend of mine now that we still work with. So I wanted to learn the actual construction side and also the finance side so that I could marry those two and really help grow. So I think it was taking off a lot of things off of Ricky's plate in order for him to continue to grow, which then grew the company. It's also bringing in some of the consulting skills like PowerPoint, which it sounds very simple, but it was creating monthly updates was something that I brought to the table. Was I think, Lorenzo, you're on those emails now. So I want to create something tangible that an investor who's getting it can quickly forward it to one of their friends or
Right.
a family member, whatever it is, to say, hey, look, I've invested in this project. It's gone really well so far. Take a look at some of their work they're doing. So I wanted to kind of create like a buzz and something that was easy for people to share so we could grow the investor list. So I think when I first started, we had 30 to 50 investors on the mailing list, and now we're in the upwards of 300
Wow.
because we were able to create something tangible for them to be able to give to one of their friends or pass along to somebody. And then we also not only did their own investor ones, but we would do overall every project we're working on, talk about the pipeline, things like that. So then other investors who are on this mailing list can see and say, wow, I missed out on that project. It's a really cool build that they're doing. I want to stay involved. And if something, piques my interest, I'll reach out to them. So that's a couple of the different ways I like brought value to this table.
Awesome. I wanted to sidetrack a little bit and just kind of
Yeah.
ask you, did you ever move on that plan of buying your first rental property?
Yeah.
Were you while working at Vonay?
Yeah. So when I first started working there, probably about a little less than a year into it, my wife and I bought a three-family in East Boston. Advice for anybody: buy a multifamily when you still have a W-2 if you're gonna make the jump. Because what I made the mistake of is buying it after I quit my W-2. So luckily, my wife, we were able to use her W-2 in order to purchase the property. But when you become a 1099 employee, you can't get a loan for 2 years. It has to be 2 full years of a 1099 employee before they'll even entertain you getting a loan. So we bought a three-family in East Boston. At the time, it was tenanted in two of the units, and it was fantastic. We were going to be able to buy it, renovate one of the units. The other two were going to be renting, and we were going to be able to, not make money while we live there, but at least live there for free. So what we did was FHA. So for anybody that doesn't know that, it's a federally backed loan that you can put down low down payments. So we were able to put down 3.5% and buy $1 million three family, which sounds crazy to buy $1 million three family, but it's 3.5%. So you're only really putting down 35 grand. And so we did that, but we got kind of tricked by the people who sold it to us. So as soon as we closed, the next day we got a letter from their attorney saying that the tenants in both units were going to move out immediately. So we bought it thinking it was going to be fully tenanted, kind of hit the panic mode, and we were just like, all right, this is the situation. We have to figure out how we can get to the end. It's now July. September 1st is the big lease up in Boston. So are we going to be able to hit that? Probably not, but let's try to hit at least 10-1. So my wife and I renovated the entire place. So we did probably 85-90% of the work ourselves. And then we hired out, a lot of plumbers, electricians, things that you shouldn't take a risk on doing yourself. So we spent pretty much our entire summer doing that, and we've learned a ton, very hands-on. It was a cool experience for both of us because then we had an appreciation of all the work that goes into it. Fast forward, that property is doing fantastic. So we were able to get it tenanted for that October. The value increased because we renovated the property, we pumped value into it. So then after a year, we were able to refinance, get it out of the FHA loan, that we weren't paying PMI anymore. And now the property cash flow is a good amount, which then allowed us to buy another multifamily because then we now had this extra income coming in that helped offset cost. Once we were able to do it a second time, it just continues to offset your other income. It allows you to take more risks, be able to do more with it. And it helps when you go to take on loans for your own development projects. Because now you have these assets that are helping you out.
All right.
Awesome.
That's incredible. I
Yeah.
did want to ask to the timeline of that, because the FHA loan, were you guys married at that time, or was that while you were engaged or prior?
No, it was while we were engaged. It was like, I think we closed on it 3 months before we got married. So what we did was we just put it in her name. And then once we got married, we put it into an LLC that we were both managers of. But we were engaged for over a year at that point, and we were getting married soon. So we both felt comfortable doing it. I would say if you're going to partner with somebody, just have it all documented in an LLC and don't just have assumptions. So, I mean, it sounds crazy, even though we're married, even when we buy a property, we still put it into an LLC and put both of our names on it.
Right.
And I suggest even if you do that with friends, do the same thing.
Definitely. Yeah, the only reason I asked was because I've heard some things in the past too about, your FHA eligibility, and once you get married, you only have one, but you could essentially buy two properties, individually using FHAs, but that could definitely lead to a lot more complex.
I think I don't know if it's changed, but at least when we were doing it, you're allowed to do more than one FHA in your name, but it can't be more than one at a time. So when we did that refinance, we basically added enough value that we could get into a conventional loan, which had a lower interest rate and no longer was an FHA loan, which then freed up my wife to do another one in her name if she needed to. But at that time, I think by the time we closed on the second property, I think I had already had 2 years of 1099, so we were able to use my income as well. But you can refinance out, and as long as the story makes sense. So you can't do another FHA. Like if we bought in East Boston on 123 Main Street, we can't buy 125 Main Street. It's the same size building right next door. You have to have a story that goes with it. So whether you're going from a 2-family to a 3-family purchase, that's a story you could do. You could do a relocation. You could say, oh, well, Dorchester is closer to my job, so it made more sense for us to move there. That's why we should be able to do it. It's not hard to get the FHA again, but you have to have a storyline that lines up.
Gotcha.
And I love that you mentioned the FHA stuff because, and this goes back to the if you want to jump into something, you should plan it. I actually learned about this FHA stuff, and I was like, no, sorry. Before learning about it, I was thinking, you know what? When I graduate, I don't want to get a W-2. I just want to jump right into real estate. But then it goes back to the planning stuff. Think about it. You can just graduate, get a W-2, get that experience, right? You're working with a
Yeah,
developer or an investor, whatever, and you're getting that W-2 so you can get an FHA loan and you can house hack. So you're basically leaving for free or for very low cost, right? And so
exactly.
that definitely is super important. And I want to mention that because at Bentley, we don't really have any, as Adam mentioned, we don't have a major, minor. We only have, I think, one class, and I think that's about it. So and
Yeah.
it's interesting because Bentley Real Estate Group is the second biggest club in the whole university with over 800 students. So
Wow.
um,
Yeah,
that's
it's
very important to mention.
something to mention too is when you have a W-2, you only need 6 months of the W-2 in order to get a loan. So versus the 2 full years of a 1099, very short timeline to only have a job for 6 months. So if you graduate in May and you're pretty much only waiting until like November, December, and you could buy a multifamily.
Yep.
So it's pretty cool. And if you're a single person and you don't have like a spouse to buy it with, you could also move into a place and have your buddies rent the place with you. So, I mean, if you buy a triple decker that has 3 beds on each, you can rent out the other units and then rent out the other bedrooms to people. And it's a very quick way to build wealth. And it doesn't take a rocket scientist to do it. It's, very achievable.
Right.
It's just, yeah. And what I would say too is like stay persistent. So during COVID is when we were looking and we were going into places like having to wear masks and like you didn't know what to do. Stay persistent. I think we put in 17 offers before we got one accepted. And after the first one or two, it was super disappointing. We're like, we'll never get a house. And I'm sure a lot of people in the market right now feel that way, trying to buy a place. But after the first two, it almost just became like, hey, put as many offers out that work for you, and hopefully one of them lands. And after 17 offers, we finally got one that got accepted, and it worked at the price that we got it for. So just stay persistent with it.
Yeah, and I also want to add that real estate there's many things that could happen that you don't plan. And I love that you mentioned that, the tenants were going to move out, but that's if you see it now, it was probably a blessing because now you could renovate it and add value to it and now rent it at higher
Yeah.
rents. And you were buying it in COVID as well, and you were like, oh, what are we gonna do? But then, probably when you refinance at super low rates. Am I correct?
Yeah. Yeah. I mean, at the
And
time,
so
it was like three. I think we're locked in at like a 3.2% interest
right.
rate, which is
And right now, I
insane.
mean, East Boston is a great. I'm always cold calling and looking at for deals there. So that's East Boston is
Yeah.
great.
Yeah. And COVID
Um,
was not only a weird time looking at rental properties, but construction stopped. So there was
oh
like
yeah.
a 2 month period where construction was not allowed. And for me, that was a big turning point of like, do I go back to corporate world or do I stay doing the real estate development? Because at the time, like you couldn't do anything with development. And I remember talking to my now wife about it, and I'd probably give her the biggest shout out from why I've stayed in this industry because I was about to go back to corporate world because I was at that time, it was only 4, 5 months out of being in the corporate world. So I was still keeping in touch with old managers. I was still getting reached out to by recruiters from people that were trying to recruit me to other companies. And I think the further you're away from the corporate world, the less attractive you are to get back in. So there was kind of a time limit of like maybe a year if I tried something. Because I go back to one of my original points of the story that your resume tells. If I do this for 6, 7 years and I try to go back, one, if they would ever take me, I would probably be back in the same role I was 7 years ago. Um,
Right.
so I remember kind of contemplating where's the real estate development world going to go? Are property values in the city going to, completely go away? Or people just want to move to the suburbs? There's a lot of uncertainty. And my wife basically was like, hey, we have enough to cover rent. We're going to be able to like buy groceries. We're okay. And you're happy doing this. This is what you've always wanted to do. So just give it a full year. And if at that point you want to go back, I fully support you, but give this a full shot. But again, construction was shut down. So I was trying to rack my head. I'm like, how can I add value, one, to the company I'm working for right now, but also just like give more exposure to the consulting that I'm trying to offer to other developers. So I basically started doing uh, underwriting tutorials on Instagram and started posting videos about the models I've built out, how to underwrite them, the services that I'm offering. And it just kind of blew up overnight. I think in one night I got like 250 followers because my video started going viral of how to underwrite deals. And then I started getting developers reaching out for asking me to underwrite deals for them. And kind of like that business model just kind of spurred off on its own. And I used those 2 months where you couldn't leave your house to just create all these videos. And kind of made, lemonade out of lemons and just did the best you could. And then eventually the market opened back up and we had a great run for 2 or 3 years after that.
Oh, that's super interesting. And I think that's super important too, being creative, right? I think especially in today's market, with rates,
Yeah.
the numbers don't work, right? So you gotta find a creative way to do it, where it's seller financing or
Right.
getting I don't know, a hard money loan and flipping it in a year. Being creative is super important right now. And I wanted to ask you, so now you've been since 2019, it's been 5 years. You're at Volney. And how have the past 5 years been? What are you kind
Yeah.
of doing right now?
Yeah. So the past 5 years have been great. I feel like I've learned a ton with the development. Something that I would say the last 5 years has taught me is more of the construction side. I knew coming in that I didn't know a ton about the construction side, and I just had basic knowledge of it. And I feel like I'm really starting to hit my stride of marrying the two of like the financial side and the construction side, because now it's 5 years of 5 days a week working. I wouldn't say in the construction field, but being on site almost every day, learning from our GC, learning from our subcontractors, architects, engineers. I feel like I've really hit the stride of marrying the two of the construction and the finance and moving it forward. So the last 5 years has been great. I've gotten exposed to a ton of different projects working with Volney and V10. So we've seen some large scale projects. We've seen smaller ones from single families to, 5 units, 9 units, 15 units. And then with the V10, there's been some 85 unit, 175 units. So just kind of seeing and being exposed to so much has been awesome. I would say in the future, want to continue to just marry the construction and the finance side and just see how far I could take that and uh, just continue to do more development projects. And then for me personally, just doing more to add to my rental portfolio. For me, that's my retirement. That's what I want to be able to pass down to my children someday. So for me, getting that rental portfolio bigger and bigger is the most important to me.
I just wanted to circle back on something too,
Yeah.
kind of about the creativity involved in the deal processes that you're working on now, but also your personal investments and even going back to the PowerPoint slides for investors that you were making, kind of that synergy between that creativity, persistence, and also kind of agility are some reoccurring themes that I've just heard over this conversation. But how do you think that weighs in relationship to the quote unquote blueprint or structure that's kind of been placed upon the industry, that's saying like, okay, here's your roadmap, you're going to go do this for 2 years and then go here, and then
Right.
what you do for your first multifamily, it's kind of like a structured blueprint. So to what degree do you think that creativity, persistence, and agility really comes into play,
Yeah.
to combine with that structured blueprint that's kind of been, set forth?
Yeah. So that's a good question. So I think for me, we had done, like I said before, the FHA or low down payment for, I don't think the second one was technically FHA, but it was a jumbo loan. But the point of that story is like it was low down payment. So now that my wife and I no longer live in one of our multifamilies, because that was the other thing, we'd be owner occupied when we would move into them to get the benefits. And then now we live in a single family that, doesn't cash flow because we're just living here. We've realized that the amount of capital needed to continue to buy multifamilies in an expensive market like Boston is harder and harder because you no longer need the 35,000, you need like 400,000. So it's a huge, huge difference. So I think for me, it's how do I adjust in there to your point of like trying to be agile and not just taking no for an answer or saying like, oh, this sucks. Now we only can buy one every 5 or 6 years versus every year. The way that I've now kind of combated that is bringing in partners. So I'm bringing the sweat equity, I'm bringing the knowledge of the industry and trying to bring in equity partners. So that's what I've kind of started to pivot to now is offering my services. So from the construction side, the underwriting side, the connections in the industry to get the job done, renovating it, using the connections in the industry to get it leased up and really fully stabilized and be able to take, hey, here's the blueprint from what I did with the first two properties. Here's how they've performed over the last 4 or 5 years. This is why I'll be successful on this next one. And bringing in partners to do that is going to go a long way because then not only does that help offset the cost of the down payment, you could be getting paid throughout the project. So I'm taking either a GC fee on it, or I'm taking a developer fee on it, or I'm taking an owner's rep fee on it, and doing all the sweat equity. I'm still bringing money to the table, but other value that I'm bringing to the table, either getting paid or getting more equity in the deal. And that's kind of the point that we're at now. We have a few awesome partners that we've been working with over the last year or two, and that is definitely the next step and continue to grow that. So, definitely still continue to do the 2 and 3 families, but eventually I'd like to grow to do some larger ones, whether it's 6 units, 9 units, 12, etc.
It's great input. Thank you.
Yeah.
Yeah, I wanna kind of reflect on your career. And I have a question here. What do you think was the toughest kind of challenge in your career so far?
Definitely COVID. COVID was
COVID.
definitely the biggest challenge because it was completely uncertainty of one, is the city ever going to bounce back? Because I don't know how old you guys were during 2020, but it was a very scary time of, our city's done. Like, are people forever just going to move to the suburbs? Suburbs market was hot as ever. Like people were paying, you know, 300,000 above ask on a single family. Like things were absolutely insane. Nobody knew what was going to happen. Nobody knew if companies were going to still have offices or was it going to go fully remote forever. We don't know how long it was going to last. So it was just a completely uncertain time to be in a new career and a career that was solely based in a major city. So that was the most challenging. And then once things started to open up, it took a full year and a half for all the supply chain to get back to normal. So before not a fake example, but a real example was like appliances. Appliances used to be like a week out. Like you would call the appliance company and say, hey, I need 10 fridges and appliances for, 10-unit project. They would say, no problem, we'll have it there in a week or two, to being 8, 9 months out and just not being able to get, the same brand of appliances. So you were finishing condos and having to put in, a Bosch fridge and a GE stove and a Samsung, microwave, and you had to just mix and match whatever you could get. So we felt those challenges for a long time. So COVID was definitely the biggest impact on the career.
Got it. And I'm wondering too, in when you kind of moved from the corporate world into the real estate world, did you have any doubts? Like, is this gonna
Yeah,
work? Like,
definitely. It was a very humbling experience. I remember going to one of the job sites and one of the subcontractors was on site about to perform their work. And they were getting introduced to me and I said, I just came from Deloitte. And they just looked at me, they're like, what is that? Like, I have no idea what that is. And it was very humbling where I went to a business school. So when you said the name of a company like that, they all knew what you did, the credibility of the company. And that kind of went out the window. Unless I was talking to investors, nobody really cared that I had a finance background. You were now in construction background. What value can you add in construction? At the time, I couldn't add that much value. So I led with my strength to try and add value where I could, but I stayed very humble and tried to just learn as much as I could. And I was very, not vulnerable, but I would be very upfront and honest with people that I would meet and just say, like, hey, I'm new to construction. if you don't mind, can you explain what you're saying right now? So if I'm talking to my plumber and he's saying I need to run XYZ here, I would say, all right, can you just dumb this down for me and explain what you're doing and why you're doing it? And I would do the same thing with architects, engineers, framers, whoever I could ask questions to, I would ask them questions and just be very open to learning and try to just absorb as much as I could.
So I wanted to, just follow up on that point of kind of, that value add, and also what you were saying earlier about, when you're going to or finding a mentor, or, asking questions, going to,
Yeah,
coffee chats or whatnot. You're looking to provide a value, not just leech off of them, right? So
100%.
that that idea, I just wanted to get your process on kind of what you look for and how you kind of identify where you add value or how you can add value.
Yeah,
Granted, that's different across every situation. So I know there's
sure.
not going to be like one great answer, but just kind of a mental model of, what you're looking at, what you're kind of analyzing, how you're analyzing it, and
Yeah.
then formulating what you can bring to the table.
Yeah, and I think you made a good point too of everybody is different, every situation is different of how you could add value to them. Before I get into that, I would say if you are picking up on that the mentor that you want to work with doesn't want to work with you, just move on. I think it's not, I wouldn't take it personal either. That person could just be, super busy with work. They could have something going on personally. Find somebody who's open to teaching you and try to add value to them. So a couple examples I could give is one of them is like the GC that we work with every day. He likes to buy rental properties and or he'll do development deals. And the value I could add to him is underwriting. So when he has a deal, I underwrite it for free for him. But I also call him 10 times a week to ask him questions about construction or, you know, what do you do in this situation? So I'll ask him a million questions that way. And it's the reputation I've built of like underwriting deals has helped me go a long ways. So some of my subcontractors who are now buying rental properties, that's the same thing to the GC, same thing that I add value to the GC, I do for them. So I'll underwrite deals for them. I'll, offer advice on like ARV of a property. And in return, I ask them construction questions.
Gotcha.
I want to add on to that. In terms of finding a mentor, again, like I said, Bentley doesn't, have any much resources on real estate. So I'm wondering, how do you think, our students can kind of find, because, these internships throughout the year, and
Yeah.
add value to someone.
Yeah. So I would say LinkedIn, Instagram, find somebody that is in the industry you want to work with and just reach out to them and just say like, hey, can I buy you coffee? Can I grab lunch with you? Can I just have a 15-minute conversation with you? And after that 15, 20-minute conversation, if you feel like, hey, this is, a person I really want to learn from, I admire them. Personally, I admire them career-wise, then just try to figure out like how you can add value to them. Again, like I'm in a developer networking group, and there was a GC that is probably 10 years ahead of where I want to be. And I waited for him to put out in the group that he needed help with Excel. And it was something very simple, but it was like, boom, I can help you with that. Can I come see one of your projects?
Right.
And it just kind of figure out where you could add value to them, I guess, is the only thing I would
Definitely.
say. And use your alumni network too. Like for me, I went to Bryant, so I've gotten DMs from people either in Instagram or LinkedIn, and they'll say like, "Hey, went to Bryant, or I'm actively going to Bryant. I have an interest in real estate. Can we just chat for 20 minutes?" Things like that.
Absolutely. And I think I wanted to add that too, because I mean, that's kind of how I found Ricky. I'm always, active on the LinkedIn, or just also kind of looking at deals, being active on the market. And I found Ricky because I was just literally on Zillow, and I saw this brand new condo in East Boston, and I saw who the developer was, and I sent him a message, right? And
Right.
most people that I send messages to, I mean, they don't respond. They don't,
Right.
they don't respond. But Ricky was nice enough to respond and get on a call with me and all that stuff. So that's definitely, I think, the persistent part is super important. For the students that, just always be getting yourself out there, going to networking
Definitely.
events, talking to as many people as you can about real estate.
That's a
And
good
so,
point too, is
yeah,
putting yourself out there. I think something that is a helpful realization throughout your career is like nobody's there to save you. So
right.
you have to go out and make your own career. So you have to pursue what you want to be doing. You have to be persistent. You have to be okay with hearing no. You have to be, okay with hearing you're wrong. Like
Yeah.
it's not all positivity. You have to be persistent. You have to just, value yourself and vouch for yourself. Like you have to be out there and really try to make the best of your own career.
Right. And I love that you said that too, because literally on my phone, I have here a quote that says, you don't, opportunities don't come to you, you create them. So you create your own
Yeah,
opportunities. And so
100%.
that's super important. And I
And
want
even
to
as
kind
being
of,
in this, even being
I,
in the industry, I would hear like I'd want to continue to grow my rental portfolio. And I remember just sitting there being like, oh, nobody's bringing me a deal.
right.
And it was just kind of like a realization of like, nobody is bringing you a deal. You have to go out and find your own deal. You have to make your own deal. Like once that clicks in your head, your whole mindset shift will completely change for work.
Definitely, definitely. And also when it comes to finding deals, cold calling. I mean, I spend
Yeah.
my days cold calling and it's like 99% of people don't answer and the people that do just say no. So it's just kind of persistency, being there all the time, dun, 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 like hitting those
Yeah.
reps. Um and I wanna look back in your career. You moved up pretty quickly. What do you think, made you stand out and made you go up so quickly?
I would say just working hard, putting in the time and being okay with taking on the work that people don't want to do. Whenever you go to a new job, whether you're 5, 10 years into your career or it's an entry level job, you're most likely getting some work that somebody else didn't want to do. Uh, and just taking it with stride, being a sponge and just learning as much as you can and just adding value that works for the company. I think something important in order to not only grow but have a successful long career. It's a marathon. It's not a sprint. So
Right.
I don't. I'm going to mess up the exact quote, but it's would you rather work hard now and have an easy future, or have an easy now and a hard future?
Right.
So if you work hard early in your career and really make a name, a reputation for yourself as a hard worker, it's going to make your career that much easier versus if you slack off or you just like are partying all throughout like your early to mid 20s and don't really take your job serious, you're going to hit a point when you're 28, 29, 30, and you're being looked at and valued as the same entry level employee that's only been there for a year. And that's a really tough pill to swallow. And that's also a tough thing to come back from. Uh, Once you kind of have that reputation, it's hard to go forward. And something else kind of along those same routes is just knowing how small like the world industry is. Like it's not just, if I work in insurance and I go to consulting, there's going to be some overlap or a manager at a previous company, might go to college with somebody that's now at your company. Word travels fast. So just one, know that your reputation is everything. It could take years to build up a reputation, but it takes one moment to ruin it. So
Right.
just know that like your reputation is everything. So if you build up a good reputation, that will follow you from career to career. And you'll see quickly, like when you become new somewhere, everybody there has done their research on you. They've, looked on your LinkedIn, they've looked on your Facebook, they've tried to make some connection to be able to ask somebody that knows you, like, hey, what is this person like?
Definitely, definitely. That reputation is everything in real estate. That's something that I've learned.
Yeah.
And this goes to the next question. What do you think is just one thing that students can kind of do to set themselves up for success in real estate?
In real estate specifically,
Yeah.
I would say finding deals is one of the
I
biggest pieces of real estate. So if you're if you have zero experience, do exactly what Lorenzo is doing and cold calling people because that's something that a lot of people don't want to do. And it's hard, as you've seen, it's very hard. Most of the time you don't get answers. And when they do, they yell at you and tell you, don't call me again. But if you can get one or two to land, those are home runs. And then you get that reputation, you build up a buyer pool. I think if you're trying to get in, that is the biggest value you could add to somebody.
Definitely. And you can also be creative too. I mean, you don't have to go the traditional route and, buy it or do a flip. You can wholesale it, you can
Yeah,
flip it, you can find a partner if you don't have any money. So there's a lot
exactly.
of things that you can do. Um, and so kind of wrapping up here, um, if you could leave our listeners with one key takeaway from your story, what would it be?
I would say similar to what I was just talking about is just work very hard earlier in your future and just know that, the career path you take, it doesn't have to be, one specific route, but you know, know that your reputation is going to follow you and know that your resume has to read a story. So, like I said before, don't bounce around job to job. But what I would say is find what you're good at and find like a niche. Like don't try to be a jack of all trades because you won't be able to grow, but find some specific niche that you could be very good at and everything will follow. You'll enjoy it more. You'll make more money on it. You become the specialized person in that, specific role or industry or skill set. That's going to go a long way. So I would say find that and the enjoyment and the money will follow. So I'd say that was probably my biggest advice.
Yeah, being a master in one thing is more valuable than being good at a bunch of things, right?
Yep, exactly.
Cool. So, just lastly, if students want to connect with you, how can they
Yeah.
reach out to you and connect with you?
Yeah, I would say most easiest way to, follow along with the story and reach out to me is Instagram. So KP Capital. And then they can find me on LinkedIn, Kris Proule.
Awesome. Adam, do you have any other questions?
No, I think that summed it up great. Especially, jack of all trades, master of none, but jack of one trade is better than a master of none. So
Yeah.
it's just kind of also that delicate balance of, students also having that ability to explore and get their, feet wet in a bunch of different industries to find that one thing. And that's kind of what you're saying, try to find that early on as soon as possible. And from there, then you niche down, focus, put your head
Yeah.
down. And, like you said, it's not always just a one-way path, but really putting your head down to that one thing at all times leads you to the best point where you can then transition just as you did. So
Yeah. And I would say too, to students, don't be afraid to make a pivot. I mean, I have friends that went to business school that became nurses. Went to a finance background. Now I'm in construction. So I think don't be afraid to make a pivot to follow what you want to be doing. And as long as you're going to be doing it, do it 100%. Just go fully at it. Of
Awesome.
absolutely.
Well, Chris, thank you so much for being here.
course.
Really, really appreciate it for your time.
All right. Thanks, guys. Nice talking with you.
Thank you,
Have a
Chris.
good